Hey, listen, before we get started, Nick, and Evan too, like big news came out today. I just saw that they're requiring small buildings in New York City to use garbage cans instead of just free bags, trash bags on the sidewalk. That is a major, yeah, they got to, if you have like a small building, you got to put your trash into a like garbage can.
And then you bring it out to the street.
Yeah. So no more like free like bags sitting on the street. That's a huge deal. I think that's a huge deal.
Good.
That's actually terrible for my business I had this business idea called trash ads, where I was going to create trash bags that were branded by companies like Coca-Cola or Delta Airlines, and I was going to put them in 42nd Street and in like Times Square, because I'm like, this is free ad space. So you got like hundreds of thousands of people walking around here every day.
That's brilliant.
And people are paying millions of dollars for the billboard, but their eyesight is on the floor, man. And if you have a JetBlue blue trash can all over Times Square, you're going to crush it, man. And trash ads.
This is like advertising for JetBlue in the middle of a BBC article talking about how the Air Max just crashed. Like, no.
Oh, you don't like that brand association?
No, exactly.
Your brand on garbage? Right.
No thanks.
No, you could do things like Seamless. Like the brand was like Seamless, right? Or Uber Eats. You're like, hey, you're already branding the drags that you deliver.
Oh my God, that's even worse. You're associating a food company with a garbage bag.
Oh no, I'm with you. I think there's a market. I would do that.
I like that.
I think there's a market for that.
And then you give the bags for free to the commercial buildings. Well, the cans are typically like branded by the city, but like in Soho, for example, they have this like Soho Collective. I think it's like a community organization, and they do sometimes put advertisements on the bags. And like, hey, like this street is cleaned up by like Louis Vuitton and like big bags.
I see.
I was like, oh, like, but why don't they do that in Times Square where there's all like you can get? I don't know. You could also offer the bags for free to the commercial buildings, so the buildings get free trash bags. They don't have to spend thousands of dollars a year on trash bags. The brands get free advertising in great foot traffic areas. Hey, and like you're cleaning up the city. Like it's all good for everyone, right?
It. Gabelli Funds cleans up the FDR right by my place, so it's along those same lines. Nick, you know that Gabelli Funds. You go over the little pedestrian walkway thing to the promenade,
yeah, you see their sign
on 78th Street, and you get the Gabelli Funds.
So. It's making me think of the Seinfeld episode where Kramer didn't adopt the highway and made the luxury lanes a little bit wider because the lanes were too tight. I would go with adopt the highway, Evan, over labeling JetBlue on trash cans and trash bags.
I think there's something there, though, Evan. You should do it.
You got something.
Do it. It's like a thing now. I'm telling you, the Mayor Adams just announced it, so there's like buzz. So like now's the time. Strike while it's hot, right?
Trash ads, guys. I already own the domain. It's good stuff.
Oh, really? Do it.
See, he's just pitching the domain. He doesn't even want to do the business. He's just trying to flaunt that for $10,000 right now.
Oh, I see what's going on. Fair. Okay. I like that. I like that too. What's wrong with that? All right, fellas, let's get started. So, okay, I'll run us through here. We got Clint Sorensen joining us, Chief Investment Officer, WellShield, an outsourced CIO and investment research company. Evan Cohen, co-founder and Chief Operating Officer of WithVincent.com. It's a media company focused on alternative investing. And of course, Nick Fusco, CEO of ApeView, is a pre-IPO secondary market pricing company. Okay, so fellas, got a couple questions for the team today. The first one is founders. Should founders of venture-backed tech companies sell their equity? There's kind of like this stigma out there around this. But the reason this came up is the CEO of Revolut. So Revolut announced that they're going to do a big deal. This is the online bank out of the UK. They're going to do a $40 billion valuation, which in and of itself is eye-opening because that's a huge leap from where they're currently trading in the secondary. They're doing a $500 million round, but it just got announced that their CEO is going to sell stock. So Revolut's not like a new company. It's been around for a while. It's obviously very big. So like, what are your thoughts? Like maybe like Nick, we could start with you, man. Like, what do you think about CEOs selling the company? Should it have like a negative stigma around it?
I think it depends on how much they hold. There is an average here. I love the data that comes out of Carta because it will show things like what's the average holding of the original founding team, things of that nature. And I'm just going to look at a little bit of info from them right now, glancing away. way over 50% of the company was owned by the founding team at Altazian, ZoomInfo, and Klaviyo, right?
Okay.
When you're way above the average, I think it's super reasonable to bring that down and start getting some liquidity as a founder. But when you're way below the average, maybe you don't want to have be observed as less investable if you don't
Sure.
have as much skin in the game. So companies like that, I think, are going to be like a DocuSign. Slack had a pretty low ownership, but it was probably more distributed. Toast as well. That's now public. But I think it really depends. You want to be in a sweet spot, because if you own way too much, maybe the VCs aren't happy where you're going to take the company in terms of direction. But if you own too little, then what's in it for you? Or are you just there for a big salary?
Right.
That's my 2 cents on that.
And I think that's been kind of the issue, right? So like Clint, as an investor yourself, and you're allocating to companies, if the CEO is like kind of selling stock, is that maybe they don't want to stick around, or like what are your thoughts around this?
Yeah, I'm with Nick. It just depends. It depends on a lot. Depends on the company. It depends on how much they own. It depends on how long they've been around, right? Founders need liquidity occasionally as well, for just lifestyle needs, right? They've typically given everything they can into the business. Most of the time, their entire net worth is wrapped up in the business. So having some liquidity throughout a life cycle of an organization makes sense. It just depends. I wouldn't be thrilled, nor do I think investors would be thrilled, about an up and coming company that's relatively early in its life cycle and the founders not showing commitment, is liquidating a large percentage of their holdings.
Right.
That would cause concern. But I do think, but I don't think that just the fact that a founder's selling is bad from my perspective.
Got it. Yeah. So Evan, like taking a little off the top sounds reasonable, right? What's your perspective? Is it, you agree with Clinton, Nick?
I do. I think it's a well-known secret, or maybe not even a secret anymore, within Silicon Valley. Many founders take some money off the table. Maybe if it's a large Series A, or at the Series B, $1 million, $2 million. That's pretty common, and it's quite comfortable, or it's quite expected from investors, because investors they understand that, to what Clint said, that founders put in their sweat equity. They oftentimes have a lot of their own capital there, and they also oftentimes want to keep cash in the company. So at the end of the day, like, it's really important to the CEO or the founder and team is not taking a massive salary. They are tied up with this equity position, and giving them a little liquidity gives them some breathing room so they can continue to focus on the business and not focus on their personal net worth, or their wealth situation, or their cash flow situation. I do also think there's a facts and circumstance piece here of, okay, what percentage are they selling? Are they still incentivized to continue to see the stock go up? Oftentimes, we sometimes see like some liquidity happen, and then there's a new share issuance with a new vesting schedule that keeps them aligned along with the investors throughout the future period. And I think that also, depending on the size of the business, for example, this Revolut deal, $40 billion, $500,000,000 it's a large amount, or $500 million. $500 million is a large
$500 million, yeah.
Relative to $500 million relative to $40 billion, though, isn't probably like a large percentage of the owners. And
right.
So for that person to be able to take equity or some cash off the table, or chips off the table, after committing years and years of growing a very successful business that's robust and likely will go public at this late stage, it's very different than a founder taking chips off the table very early on, where there is not a proven outcome likely to happen. So I think that's where I stand on it. I agree with a lot of these folks here.
Yeah, I have nothing else to add. I think that was all very well said. Okay, let's talk crypto, right? So crypto companies. The way this is shaking out with the SEC, if you're in a crypto, you're just it's a brokerage firm, and the SEC is kind of telling you all these crypto securities are cryptocurrencies are basically securities, right? So like Clint, the latest has been the SEC just recently brought action against Consensus, which makes MetaMask. MetaMask is like huge, right? Like everybody's got MetaMask on their phone. And they're basically saying they're a broker dealer, right? So like, do you agree with that comment that like these crypto shops are basically broker dealers, and these cryptocurrencies are like securities? And if you do agree with that, like, if you're one of these shops, like you or an investor, you should just assume that these guys need to get registered properly, right, with the SEC or FINRA. What do you think?
First of all, I love the crypto space, as you know. I think it's a great asset class. But like my friend James Catula says, who's also an attorney, he says it's like the Underpants Gnomes episode on South Park, right? So step one, steal underpants. So in this case, build something in crypto. Step two, question mark. Step three, profit, right?
Right.
And the question
Okay.
mark is going to be decided in the legal system, which is what's happening now, right? And it's built on precedent. So once you have some successful legal cases going after crypto as a security, that's exactly the line that's going to happen across the space. I think it's good. It might not be good temporarily for these organizations, right? Because regulatory costs and burdens are going to go up. But this is great for the industry in total, just like it was fantastic when we got futures. So essentially the CFTC stepped out as a regulatory body for Bitcoin and Ethereum futures. That allowed people to actually build solid strategy around these things within the wealth management context, so the world that I typically live in. You had safety in that regulation. You had precedent. So I think this is good. I think it's going to be challenging and tumultuous as we work through it, but I think it's good ultimately for the infrastructure. And so, yes, everyone should think that this is going to happen, that all of these things are securities in the SEC's eyes. And as they get wins to that effect, just expect it to pour through.
Yeah. So Evan, to that point, if you're a CEO of a crypto related company, I mean, you might as well start filing, right? Isn't it? What do you think?
I disagree with Clint's perspective here. I think this is not good for the market. I think.
Okay.
Look, I've been in this space, or around the crypto space, in the regulatory crypto space since 2017. I've done a regulated security token offering, participated in unregulated security token offerings. At the end of the day, the SEC has not clearly defined why these should be considered securities, and by universally classifying as all securities, they are creating a challenging environment for any crypto organization to operate. And look, do I believe that some of these tokens look and feel like securities? Certainly. I also believe the definition of securities is based on an Orange Grove Howey test that's over 7 years old and probably needs to be updated. And so, and I also think that crypto, I'm a big advocate for crypto, just like Clint is. I believe that the decentralization and flexibility of this market is what allows it to thrive and grow and innovate. And so what I see the SEC doing, coming in here and hurting exchanges, hurting regulated entities like Coinbase who are trying to do it the right way, they are making it harder for this innovation to operate in the United States. And that is what it's actually is causing these organizations, the best organizations, to work offshore. And a lot of the innovation is happening offshore, and that is bad for the United States. And that is ultimately bad for crypto because a lot of the US dollars are
Let me ask
the
this
SEC has done
so, and
historically,
maybe
and
Nick, you
continue
can
to do
pipe
good.
in here too.
Go ahead. Everybody. And I certainly think that regulation is a good thing if it's well intentioned, it's well defined, and well practiced. And I do not think the SEC has done a good job of doing that.
Yeah. Okay. So fair point, right? Let me maybe Nick, you can pipe in here, right? So it seems to me, having been a product guy at two major broker dealers and then running asset management companies, it's pretty clear to me that the SEC and regulators, whether we like it or not, they're like regulating all the stuff. So if you're either in it or going to start it, you might as well just go ahead and get regulated, jump in, start the broker dealer, whatever. I'm not like Evan. I'm not so sure that it like stifles innovation because we got a super robust and innovative capital market and financial services industry in the United States, and everything's regulated before crypto showed up, right? So maybe it's a little bit of a governor, right? But I mean, Nick, what do you think? Would you agree that the regulators are basically saying everything needs to be regulated, and if you do, or what's your thoughts on whether it's positive or negative, or if it's a big deal or not?
I think it is a big deal. I think really, if you look at everything that's being pushed by Gensler is probably a little bit more than anyone anticipated from from others at the SEC that have come before him. But at the same time, I don't think that the SEC is being the underpants gnomes, or I forget what Clint said now.
Yeah.
but where they're just stabbing in the dark and questioning, okay, the question mark is this going to stick when we go after consensus, or is it going to stick if we go after Ripple, which ended up getting appealed, and we're still looking at things like that. But to a large extent, I mean, their intentions are to protect the broader good, or the end consumer, and I don't know that it's going to stifle innovation, because I know might be a reach, but if you compare this to the like how much goes into the creation of a new automobile, right? The fact that we now have to have airbags and seatbelts and all these new safety features, I don't think that's necessarily stopping an Elon Musk from coming in and saying, I'm going to make autonomous vehicles. But it does probably go back to your point, Aaron, that it really does hurt the smaller entities that are emerging. And this is probably hitting on Evan's point, that if you're a 10 or 20 person startup with $20 million behind you, it's going to be awfully hard to compete against BlackRock. It's going to be awfully hard to compete against Van Eck, because these guys know how to handle securities law. They have teams of lawyers that are ex-SEC as well, so they're going to be able to better manage. So I think there's going to be a balance that ends up getting struck, that any of these new firms that are really going are going to have the most ingenious ideas, or operate offshore, or get absorbed to these larger companies. So the dynamic is just really changing. But the fact that you can go out and tokenize anything you want and try to make that as your new asset class, I also find that a bit scary. So you do have to find a happy medium. Otherwise, we're just trying to circumvent taxes and doing some dodgy stuff here. So I would much prefer to go into like a nice ETF supported by a brand name company that I recognize, rather than XYZ Co. operating out of, you name your favorite Virgin Island, right?
Right. No, it certainly will cost more to start a crypto-related company for sure.
But we haven't seen that.
That is true.
I mean, look at Coinbase. Coinbase is probably the largest crypto business on the planet. They are a public company. They're worth tens of billions of dollars. They have gone in. The SEC has said, "Hey, if you want to register, come in. We want to have these conversations with you." You know what happened? They got sent a Wells notice. They got sued by the SEC. Like, what the SEC is, they're saying one thing over here. They're talking with intent. They're like, "Hey, we want to protect our customers. We want to protect innovation. We want to make sure this happens." But their actions are totally the opposite of that. They have not allowed for this. They have not come in and provided clarity. They have not made it easy for companies to come in and get regulated or provided approvals.
I don't know.
So would you blame the SEC for FTX then?
No. Listen, I got to tell you, I think they've been very clear. They need to be a broker dealer. I don't know why they just don't do it.
Coinbase has two broker dealers. Coinbase has two broker dealers.
So then they should. Well. But listen, that's not new. That's the same. That's FINRA and the SEC they always come back after the fact and find people, right? So I think if they were treating this stuff if they were a broker dealer and they're only selling securities, and these cryptocurrencies that they're offering are not registered properly as securities, file Form Ds or whatever they need to be filing, then they shouldn't be trading them, right? I mean, that's how I would approach it. We used to do that at Morgan and TD, right? Same thing.
I just think that it's a challenge to say that everything universally that's tokenized is a security. And in fact, the two most successful crypto public offerings that have happened are Bitcoin and ETH, which the SEC said are not securities. So in fact, the SEC's, what they're actually playing in market is actually saying, hey, if you wait around and you do it decentralized enough, we will one day say that you're not a security, and then you can operate the way that you've been trying to operate for the last 10 years. But they're not really trying to do that. They're trying to go after all, and I think that they're trying to protect investors. And going back to what Nick said just about FTX, it's like FTX had to operate offshore because the lack of clarity as regulation. As an RIA, guys, like, you can't even satisfy crypto's custody rule.
You're really giving FTX the benefit of the doubt, though, on that.
Yeah.
I think there are other reasons FTX is bad for. I
would offer that. So this kind of ties it back in though to what Clint mentioned earlier. Like, I don't think this stuff is investable. Whether you're investing into a company or you're investing into a cryptocurrency unless you have this like regulatory coverage. So like to Clint's point, the futures market kind of, they bless these futures. That's something that you can buy now. And I think you got coverage, right? Regulatory coverage. But these ETFs, this is kind of the next topic I want to talk to you about, right? These ETFs are coming out now. I think, Clint, would you offer that same, like you mentioned the futures earlier, is the ETFs also that kind of similar kind of coverage, regulatory coverage that you were thinking about?
Yeah, and I agree with a lot of what Evan said in regards to what this does to innovation. It doesn't stifle it completely, but regulation always stifles innovation among smaller companies. If you think about, the laws of the land from this perspective, the growth curve. Remember, we all learned about that in economics or finance, whatever class you took, but you all learned about the growth curve, right? The growth phases. And when you get to a plateau phase, what happens now is you have something called lobbying. And these lobbying dollars support keeping you in a competitive advantage. So you can prolong this plateau instead of reaching your ultimate decline. I think, and this is back to the ETFs, I think this has a lot to do with what's going on in the infrastructure now. It is a full wave move to call all of these things a security. I would not be shocked if some of the biggest ETF providers in financial, old school, old world, Fortran financial infrastructure organizations and banks are behind lobbying to the SEC to push this, because this is the direction, this is the trend. And so, unfortunately, it is what it is. It's going to hurt small business in this case, especially small, in a lot of cases, genius projects and applications, especially on the decentralized finance side. And it's going to hurt them. But from an investment perspective, it's going to attract a lot of capital into these, what will eventually be securities. And that is what that's what the ETF game brings to bear. Now we got to start talking about liquidity mismatches, et cetera, et cetera. What does that do? That's a whole new. We don't even have enough time to really dig into that, because that is chain specific. But the amount of money coming in to the ETFs is crazy. Yeah, and I think that's something that has to be talked about as well. But anyway, that's my point.
I mean, one weird comparison that may actually fit here. I mean, a loan isn't a security, right? But we have a significant number of ETFs that are tied to loans.
It's a security when it's packaged and sold. Yep.
Right. It's securitized.
Yep.
Yeah. So we could securitize that into an asset backed. Okay. Now we've got an asset backed security. We have a CLO, right? But we can also throw a whole bunch of loans at an ETF, and then we're looking at a different structure as well, right? So yeah, Evan, maybe we're not too far afield away from loans not being a security, or Bitcoin not being a security, but being packaged up and sold through an ETF structure. Correct.
Yeah.
And yeah, we just need to have the right covenants. We need to have the right respect for that, so that it's not a round peg in a square hole, right? Fitting into our portfolio dynamics. If we want to shove it into Aladdin, or we want to shove it into anything else, for custody, fund administration, like, it probably should start to look like the other securities we're doing it with, and have some semblance of similar oversight. But yeah, it's an interesting dynamic there. Is all I'm saying, and it doesn't have to be seen as a direct security, or have too much change to it. But I think a lot of the evolution going to have these ETF wrappers are really good fundamentally for the market, right? More options.
Yeah. This is, as an investor, I just have a hard time investing into any of this stuff, especially when I'm in a fiduciary capacity without the regulatory kind of framework laid out. I also do believe too, and then I'll take last thought here, and then we can move on to this last topic. But I also do believe too that I wish these crypto companies would just really embrace the regulation, because I think, Clint, to your point, the amount of capital that would come into this type of technology, if it just like embraced the regulatory framework, I think it would be like a tidal wave of money, which is what we're seeing with the ETFs, right? So I think if they just embraced it and kind of went regulatory, embraced the regulatory framework, the amount of capital that would be available for these companies in this asset class would just be like explosive, right? So, okay, let's talk last topic. Let's talk AI. So Hebe is a new AI company. They just raised 130 million at a $700 million valuation. You got Andreessen Horowitz, Index, Google, Peter Thiel, all invested, right? What was interesting, and this is something we've been talking about over the last couple of weeks, but if you go to these guys' website, it's literally just like use case after use case after use case for businesses on how they would use their solution to make their operations more efficient, to do better work. And interestingly, this is close to home. There's a lot of asset management related use cases, right? Doing due diligence on companies, preparing investment committee reports. Really interesting, right? So the question that I want to put to you guys is this what it seems like a lot of companies are circling AI, right? The question I have for you guys is it what's going to be the thing that kind of breaks the mold and really starts to accelerate? Is that ever, are you feeling like, are you guys hearing or sensing that companies are looking at this stuff and they're trying to pick a partner and then they're doing more of an enterprise type solution? Or do we need these apps that we kind of been talking about over the last, several months, where we need more like specific use cases and there's an app for that and you can go in and license that app? Like, Evan, maybe we can start with you, man. Like, what do you think? Is it, or maybe it's a little bit of both, right? But what are you kind of hearing out in the marketplace around AI implementation?
I think it certainly depends on the size of the enterprise. I think the bigger the enterprise, the more CYA they will have related to their customer data, meaning they don't want their data ingested by an LLM, maybe sharing that data or training on that data with other parties.
Right. Yeah.
I do think that it also depends on the organization and what the business is, but I do think that we're seeing the enterprise push for businesses to try to figure out how to take their custom data, their personal data, their proprietary data, and put it into an LLM to empower the workforce to be more efficient, to sell faster, to generate more money, and just make more money. And so I think that you can maybe like the foot through the door application. Hey, here's an application that helps you do one or two actions really efficiently. But what I do believe that the long tail is the already sold enterprise software that already is implemented, adds AI features, using the data that it already has in its own moat to empower. It's basically a way to upsell existing customers versus trying to sell new. I think that's where it's all. That's where the real wedge is. I think it's going to be very challenging for a new entrant to come and compete with a Salesforce versus Salesforce, adding AI features that allow customers to already use the data and set up their own.
Right. I got you. I mean, Clint, do you think that is like a function of an ROI type, like the C-suite of a company? Is it the return on investment? Like, look, we're going to dump, whatever, 100,000, 200,000, 300,000, $500,000 into this AI solution. Like, how do we even know if we're going to get a return on investment or not? Right. I mean,
the productivity gains are nuts. This for enterprises. This makes too much sense, right? Because it replaces headcount. It's a form of capital, and it's typically very expensive capital. This is so deflationary. I don't think people quite realize how deflationary this ultimately is, but it ramps up productivity significantly. So I absolutely think enterprises are going to be gobbling. They have to in order to compete. I think it's going to be really difficult for the small entrants, to Evan's point too, because again, we know what this ultimately comes down to: compute spend and data. And so how many LLMs do we need? Or what's happening now, like in this case, you're having LLMs with specific frameworks, right? Specific use cases, industries that they're targeting. They're just going to be if they're good, they're going to be an acquisition target. There's no way they're going to be able to scale, in my opinion, to match where OpenAI is. This is the first time I'm kind of living through and watching first mover advantage really dominate. I mean, you've seen it in the past. There's always been some tag along competitors that do well, but this is such an expensive game. I think, to Evan's point, it's going to be these massive platforms that already have AI capabilities that they can upsell, get you into the entire infrastructure network, just like Apple did so well. And their moat for their business was that you were in you were in their network, you were in their ecosystem and used everything.
Right.
I still do everything within the ecosystem. That's going to
Sure.
be the same thing for the winners like Microsoft in this case, where they're going to add OpenAI to literally everything. And you're going to have it. Or maybe Amazon buys Anthropic, and Anthropic is everything within Amazon. Those are going to be, it's going to be a platform-based business. Nick, I know you've said this tons of time on this call every time we bring up AI. I'd wonder your thoughts on it.
Yeah, I do. Yeah, don't disagree with anything you put out there. I wonder if there's a tortoise and the hare type scenario like Google versus Yahoo. I still think about that because I think about how much money has already been dedicated to the sector. So who's to say that someone can't come at this when its cost of compute goes down, if it's ever going to happen, or if you can start to do an M&A like run. You just start to acquire the living daylights out of all these other disparate operators that have their niche pockets, and maybe that becomes your conglomerate, right? And I think the fact that we have the big players that are Apple, Google, Amazon, right, really in play, that they don't want to play well with others. So it's interesting to see the OpenAI and Apple piece. Yeah, I think we've just got a front row seat for how this is going to change, but it's going to be as transformational as Clint said, kind of putting out there, as like when search engines really hit the market and you didn't have to go to the Dewey Decimal System at the local library to find what the hell you want.
Right.
It's going to be pretty really massive. I would say. Yeah, I'm just looking more up about these Hebia guys this morning, and yeah, they want to be your gateway, I think. If we have more players like that, because no one's really figured out that gateway, that's still up for grabs, I think, as what we've all kind of agreed for. Where the big LLM players, I mean, it's going to be a massive fight, and maybe you have that tortoise and hare scenario in a year or two, but we don't know who that would be.
Yeah, I'm kind of in Evan's camp. I think it depends on the size of the company, because I got to be honest. Like, I run a small business, right? I'm not going to hire Hebia or OpenAI to come in and do like a consulting engagement with me and build out specific solutions for my business. But man, if someone had like an app, or I could subscribe to a solution where I could put a pre-IPO stock name in and it would come back and give me like updated information and research on that company every single day or morning or week, I would definitely pay for that. Right. And that could be any stock. Like, it could be, Apple, Amazon, whatever. Like, if you're, and I'm not a developer either. So I couldn't dive into OpenAI and use their API and build that out myself. And some people call that an agent, whatever. Right. But I think for small businesses, medium-sized businesses, they'll like that. There's still like a need for that application layer, because they're just not going to have the tech teams to be able to implement this stuff. And I think the enterprise solutions will just be too expensive. So but I'm just like, I like focusing on how the sausage gets made, right? Like, AI has been out there for a long time. No one really got it until the OpenAI app hit the app store, and people were like, "Oh my gosh, like, this thing's incredible." I think a lot of business, my gut in talking with people is, a lot of businesses they know that they should use AI. I think, to Clint's point, they know that there's productivity gains there, right? And they know they just don't know how to actually what to actually do.
And
right?
that's why the moment it really hit the street, everyone that was on any sort of social media got those prompts, suggested cheat sheet. Like
Right.
when you're studying verbs in Spanish, it doesn't matter what cheat sheet you have, but remember going on Twitter and every like fourth ad was, learn how to use ChatGPT. Here are like 15 commands that will change your life.
You got it.
And
Absolutely. Yeah. And remember that the majority of businesses in the United States are small and medium-sized businesses. The majority of businesses are sexy cash flow businesses that have been operational for decades. They're
Right.
probably not tech forward. They probably use legacy software like QuickBooks Desktop and Oracle,
Yep.
and are probably ripe for the next generation as we see a transition from millennials to Gen Z to whatever comes after that, like Gen Alpha. Like, I think that we're seeing technology evolve quicker, and I think that the new businesses that are being set up today are going to be using different infrastructure than businesses that were set up 10 years ago. And when we set
Yeah.
up our business in 2019, we used Google and Google Drive and Google Docs. If we had set it up in 2009, we probably would be using Microsoft Word, Excel,
Right.
Office.
Right.
And so,
Yeah.
like, I do
True.
believe that, to your point, Aaron, small businesses, especially newer small businesses, are more likely to adopt less expensive entry players that are willing to compete on price and use new tools and innovate faster. And the existing enterprises that are large and legacy and slow moving, like the Goliaths, are probably going to use the big enterprises that they already have contracts with. And then we'll have to see what happens as the new entrants grow and compete with the larger enterprises.
Yeah, I see that. I see small, medium-sized businesses using apps and then realizing some productivity gains, to Clint's point, and then being like, man, if we customize this, we could even realize our productivity gains could be 2 or 3x, right? And then they're hiring development teams or whoever to layer that in. I just like, that's how, to me, I think the sausage gets made here, right? Is there's going to be this app layer, and that's going to where we're going to start to see like massive adoption by businesses, and then there'll be this like next layer of customization that will
Absolutely.
hit right over the next couple of years. So I just like, man, as an investor, I'm just really keen on what those apps are, what those apps will be, right? And where those investment opportunities will be, because I think there's going to be a lot of money to be made in with those businesses, right?
What do you think
Yeah,
the interface will be? That's important. That's a bigger question to me. What's the interface? Is it voice?
yeah,
Is it VR, AR? Is it desktop? Like, are we seeing a new computing platform
yeah. I
that can
would say
determine the app? Which
probably
app matters?
all of
Yes.
the above, and the use case.
Whichever you want.
Yeah,
That's
and the
that's
use
Yes.
the
case.
answer.
Yeah. But like all those things, right? I mean, I think I could see different use cases and different scenarios and different applications, different industries. Like, you know how it is, guys. Like, if you're in an industry and you're doing X, there's like things that are specific to that industry. So if there's an app that's like specific to your situation, it's massively appealing, right? And they'll pay $20, $100 a month for something like that, because they can see the ROI is real close. To me, this is like to Clint, it's like an efficiency pickup, but that ROI just needs to be clear. Like we were talking about before we started, like you have $1,000 and you get a 3x return, you do it. That's easy, right? So if that's like super transparent and super obvious, you're going to pull the trigger and you'll spend the money, right? So I'm like interested. I think this next tranche of AI companies, there's going to be like an application layer, right? And I think it could be interesting some interesting investment opportunities there. So we'll see. But okay, fellas, let's end it there. Thanks for the time today. I appreciate you guys.
See you guys.
Absolutely. Thanks.
Okay,
Have
man.
a good
All
week.
right, cheers.